Okay, let's analyze the stock market to know what's happening in the market today. It's a US 30 crash. We're going to be analyzing from the daily. Let's understand what the market is doing. So we have this here as market structure shift. The market came back down here. We got our entry here and we move price up. What happened next? We had another break of structure here. We had another break of structure here and price reversed, came back down to this last order block here, and we got our entry. We had another break of structure here. The price has just been moving like that. So this was the last break of structure here. This was the last break of structure here at this zone here. So this is where my attention is centered on. We had this last move here. This is where the market is currently. So we had this move up here, this last order block here, and point this one out. This last order block here, this one here, was the one that took price to the upside. So there was a break of structure here, but guess what? Anytime the market wants to break structure, it leaves an inefficiency that causes price to retrace back to that zone to mitigate their positions before moving up with the trend. So we had this up as the last high and we have this as the last low. So this here created a fair value gap for us. Is what I want to identify for us. I was trading this market and I saw this thing today, so I wanted to point it out to us. So we have this fair value gap here. Let me zoom a little bit close. Okay, the fair value gap here indicates that price needs to retrace back down to mitigate the position here. Okay, the fair value gap is actually 3 candles here that are not touching each other. Okay, 3 candles that are not touching each other, and you see a gap in between them. Okay, that was what happened there. So price needs to come back here, fill the gap before going up to the upside. So we are going to be doing something now. We'll go down to the lower time frame to confirm this. This is actually a daily. Let's check the 4 hours to see what it is. Okay, we can see it here in the 4 hours. The same gap has been created, same gap in the 4 hours. So we have the same gap here in the 4 hours. Yeah, this 4 hours gap here. So we can see we have the gap here. This gap needs to be filled up. Okay, all this gap needs to be filled up. So price is going to be retracing back down. Now one of the takeaway you need to take out from this video is when price is coming to a valid area, okay, don't forget this was the one that caused the break of structure. This one here was the one that led to the break of structure. So price will be coming back down. This was the last candle that led to the move down. This was the last candle. Sorry. This was the last candle here. This bearish candle here was the one that led to the move to the downside. So we're expecting price to come fill this gap here. So let's keep confirming it in the 1 hour. The same thing. Okay, same thing, guys. See the gap here. It will be filled before the market continues to the upside. Now I said something. When price wants to come to a valid area, it's going to be leaving an indication for you to know that it's going to be coming back there. One of the way you will know that is through a double bottom here. Okay, this is what a static liquidity zone, which indicates that price is going to be coming back to run out this liquidity here before going up. Now the market is actually moved by liquidity. That is to say that the market is actually being driven by liquidity. Liquidity is actually the what? The the fuel of the market. So the price will not continue moving up bullish. It needs to come back down here to what? To grab at liquidity before continuing its move to the upside. As you can see up there is a double top and it needs to be taken because now it does not show that the market wants to reverse. That does not show that the market really wants to reverse. It indicates that it's a liquidity zone that needs to be pulled out by the what? Smart money guys. Let's check the 15 minutes. Okay, see what the 15 minutes is saying. The same thing. As you can see, we have to take liquidity there that needs to be taken. Now, one of the things that you take out from this video is that if you look closely, I was in this chart. Okay, as you can see, my trend lines. It's not as if I'm teaching you what I did not trade. This was my area of interest. This last order block here was my area of interest. Why? I'll analyze the chart and tell you why I had that. Okay, this was it. We had a break of structure here. We had a break of structure here. Price then come back down here, and we had a change of character here. Let me take this back. We had a change of character here. Yeah, right here. So price moved back down, created liquidity here, and I'm expecting it to come back here, and it moved up. It moved up from here, showing a change of character here. Which shows a change of character here. So I was expecting price to come back here to this last order block here before going up. But what did it do? It did not get to the order block. It just gave us a double bottom and moved up, which indicates that it's going to be coming back down. Okay, it's going to be coming backward to the downside. So this is good, guys. I'm actually waiting for price to come to this what? This fair value gap and fill it up. Okay, I analyzed it from the daily. So we're expecting price to come back down, fill up that gap for us to go up. Now don't forget, like I did in the last video, we are still expecting price to get here before going up, because this was a break of structure here. Okay, this was a pullback, but it did not get to this other block. So we're expecting price to come back down here before going what? To the upside. That's it all. Don't forget to subscribe, like if you find any value in this video. Thank you.